Pi Networks PI token looks like a busted growth story, not a safe bet. Where will price go? Pi Networks PI token trades around $0.17 to $0.19, 94% below its peak, with most serious models clustering around a $0.15 to $0.35 high risk, low conviction range for the next 12 to 18 months. PI changes hands near $0.17 to $0.19 with a roughly $1.7 to $1.8 billion market cap and about 9.8 billion coins in circulation, down around 94% from its $2.99 all-time high. Gate and CoinCodex forecasts cluster around a 2026 band of roughly $0.15 to $0.30, while CoinStats' more optimistic scenarios push into the $0.40 to $0.60 range only if adoption and sentiment improve sharply. A sober journalistic call puts the defensible 12-18-month corridor at $0.15 to $0.35, skewed lower unless Pi delivers real usage, with 70 to 90% drawdowns and sharp, liquidity event rallies always on the table. Pi Networks PI token is trading around $0.17 to $0.19 today, with a market cap near $1.7 to $1.8 billion and roughly 9.8 billion coins in circulation against a 100 billion maximum supply. In plain terms, you are looking at a mid-cap, highly dilutive altcoin that has already retraced sharply from its speculative peak yet still trades mostly on narrative, not cash flow or clear on-chain usage. Over the last week, Pi has been weak. Spot is down more than 30% on some fiat pairs, even as today's session shows a 7% bounce in rupee terms, a classic dead cat profile in crypto microstructure. Daily volume sits in the mid-tens of millions of dollars, which is enough for short-term traders to move price violently but nowhere near the liquidity profile of major layer 1s. CoinStats notes Pi changing hands near $0.17 in March 2026, roughly 94% below its $2.99 all-time high from early 2025, underscoring how brutal the post-launch repricing has been. In equity market language, this is what you'd call a busted growth story still trying to prove it deserves its prior multiple. Forward-looking models are all over the map, which tells you more about uncertainty than about destiny. Gates' internal research sees Pi averaging about $0.18 to $0.21 in 2026, with a band from roughly $0.16 to $0.27, effectively saying, sideways chop around current levels. CoinCodex's quantitative framework pushes a little higher, flagging the possibility of Pi closing 2026 closer to $0.42 if sentiment and technicals cooperate, which would be about a low triple-digit percentage gain from here. CoinStats, running multi-scenario AI modeling, sketches a conservative 2026 year-end corridor of $0.25 to $0.35, a base case of $0.40 to $0.60, and an aggressive path that could theoretically justify $0.80 to $1.50 if adoption and execution surprise to the upside. Strip away the model branding and you can reduce the next 12 to 24 months to 3 simple regimes. In the bear regime, Pi stays supply heavy and demand light, unlocks continue, user activity underwhelms, the broader altcoin complex remains risk off, and Pi bleeds into the $0.10, $0.15 zone as models like CoinCodex's near-term projections already hint at. In the base regime, Pi grinds sideways with a mild upward bias, respecting the $0.15, $0.30 range implied by exchange research and the lower bands of CoinStats scenarios, tracking altcoin beta rather than generating its own idiosyncratic bid. In the bull regime, Pi converts its large user base into actual on-chain throughput, improves liquidity and listings, and rides a risk-on phase in crypto, which is where CoinStats' $0.40, $0.60 2026 base case and $1 plus long-term scenarios become plausible rather than laughable. The most defensible 12-18-month corridor is $0.15 to $0.35, skewed toward the lower half unless Pi starts printing real usage metrics and the wider market turns decisively bullish. Upside tails above $0.40 exist, but they require both project execution and macro risk appetite. Downside tails into $0.10 or below remain very real if capital continues to leak out of speculative L1 narratives. Size exposure the way you would a thin, story stock in equities. Assume 70 to 90% drawdowns are always on the table, treat sharp rallies as liquidity events rather than validation, and never confuse